Why do we see so many of these narratives around Bitcoin for criminals? I mean, ransomware is the next great attack, Bitcoin ransomware attacks, and it's only for drug dealers, it's only for North Korea and Iran.
I've learned this, and you'll see it with the response to that Kathy Wood tweet or any of this stuff that I've been talking about. People fear change. As soon as they understand that Bitcoin is a very, very long duration asset, it perfectly suits protecting the wealth of nations.
I think longer term, Bitcoin will absolutely be a safe haven. I mean, as it grows up the adoption curve, we see Bitcoin kind of evolving as it goes. So I think right now it's kind of in this intermediate state right now where you really have to think about, well, what are the risks and how severe are they?
I think it's going to come from a small nation, something like Costa Rica or something like that. Somebody who's had currency problems in the past, and they've got a progressive young leader who says, let's just own some of this. So it's coming.
Bitcoin continues its march upwards and looks like it will continue to into the rest of 2021. Here, Raoul Pal describes the implications of being irresponsibly long on Bitcoin. Stick around to the end of the video where we go over one recent piece of bearish Bitcoin data that suggests where the Bitcoin price is likely to go in the short term. If you are a Bitcoin holder, you will want to check this one out. Also, only a tiny percentage of my viewers are actually subscribed. If you enjoy the video, consider subscribing. It's free and you can always change your mind. Enjoy the video.
The spaces makes me laugh because everyone's like, oh my God, but gold's a 10 trillion market cap. Yeah. Find me a pension fund that invests in gold. It's not really an asset people think about. So it's really funny, this gold versus Bitcoin thing, because actually nobody's in gold anyway. As soon as they understand that Bitcoin is a very, very long duration asset, it perfectly suits protecting the wealth of nations. That's all the sovereign wealth funds are, right? Usually it's an oil or commodity producing country that gets windfalls in boom times and has hard times, and they offset it by drawing down on this pool, right? It's a savings pool. Now, that savings pool needs to grow over time. A lot of it's denominated in US dollars because everything's in dollars. So they try and diversify, but to have assets that offset global inflation or global debasement of currency, etc., it's a perfect asset, particularly because it's so skewed to the upside that they can have a 3% allocation. They can lose half of it, and it makes no difference. If you get it right, it really does make a difference to the portfolio. So I think it's very well suited. The problem is, as I've argued all along, is they can't really come in until it goes up more in market cap.
Right, just not big enough.
Just not big enough yet. Because so these guys are, Norway, I don't know, it's $1 trillion, I mean, these guys are huge, huge. And they're not like BlackRock, which is, a few $1 trillion, but they've got millions of different funds. These guys are basically one gigantic asset allocation. It's, a ticket for them, they even allocate hedge fund ticket sizes of like $1 billion or, $500 million. So let alone doing something like this. So they need to put 10, 20, 30 billion dollars at work just to have a minor allocation. It's huge. I think 10 trillion, I think something like that makes sense. Also, it is interesting. I think Michael Saylor's been talking about this, but I don't think he's explained it super well. He's talked about the cost of capital being 15%, and therefore all of these corporate treasuries invest in bonds. What he's actually talking about is if you take the printing of the balance sheets by the G4 central banks and you annualize it, it's growing about 15% a year, which is that denominator falling by 15% a year. So you do buy bonds. So now let's say you are Microsoft. Okay, you've got this gigantic corporate treasury, several $100 billion in it, and you've got a bunch of credit and a bunch of, normal stuff. Now, all of that is underperforming the Fed balance sheet. Now, does it really matter because wages are also underperforming everything else? It underperforms because people like Microsoft do two things also: buy companies and buy real estate. Both of those are priced in Fed balance sheet terms. They keep going up because they're fixed assets. So they haven't got their heads around this yet. I think people haven't really explained it to them that sure, your cash flow and the corporate credit that you own will carry on for your needs for, salaries or whatever else it is, general organic growth. But if you want to buy things, they're more expensive. I've been helping tons of people trying to get across the line. and the amount of meetings and the risk meetings and the meetings with the prime brokering or the custodians, and then the reports that need to be written. It's endless. It's endless. So, and particularly if you're a public company, you've got further things that you need to do. If you're a pension fund,
pensions will do it for 3 years. I mean,
that's right. So yes, of course, it's all coming, and it just takes time. And most of them won't announce it until it's in their filings. So that's the end of each quarter. So we'll get a bunch we'll hear about next time. We'll all go, oh my God, so-and-so's bought Bitcoin. Then we'll do it in another quarter. It's ongoing, right?
Yeah, and it's going to continue. We're just going to keep seeing it. So speaking of, pensions and endowments being this huge wall of money, obviously, what is it going to take to get them in? Is the answer an ETF? Is it $10 trillion market cap? Do you think that that's something that we can see in the near future?
I think it's, I've talked a lot about the pension crisis. They're underfunded. And they took a lot of risk with people's money and put it all into equities. Now, it's still not enough for people to retire. So we've got a huge problem. Can Bitcoin help plug that gap? Yes. They've structurally got a real issue because you've got this millennial cohort that needs to buy a lot of stuff, and that's fine, and that's piling through in the passive investment vehicles and stuff like that. And then you've got this 76 million Americans who are trying to retire and can't. It's a bit of a messy situation. I do expect pension funds to come into the space because they need to. The long duration asset works well for the millennial. It could save the boomers, but there's a lot of risk to do it. So I don't know. I think it's going to come from a small nation, somebody like Costa Rica or somebody like that. Somebody who's had currency problems in the past, and they've got a progressive young leader who says, let's just own some of this. So it's coming. Does it come on this cycle or the next cycle? My guess is actually this cycle. There'll be somebody small and everyone will laugh at them and say it's ridiculous, as is the way, right? Now, why are North Korea and Iran interested? Very simply, Iran has cheap energy, and it's a commodity for them to manufacture and sell that has a global market that doesn't require supply linkages, which the Americans choke. So why would they not do it? They have a strategic advantage in doing it. But people are like, oh God, this is, geopolitics at play. No, it's just countries who have an advantage in a commodity, making that commodity. And if they get
who are sanctioned from other commodities.
Yeah, right. It's ridiculous. It's not some geopolitical play to own Bitcoin. It's a play to make some money because we choked them. Venezuela is the same.
And that's interesting. Why do we see so many of these narratives around Bitcoin for criminals? I mean, the ransomware is the next great attack, Bitcoin ransomware attacks, and it's only for drug dealers, and it's only for North Korea and Iran.
I've learned this, and you'll see it with the response to that Cathy Wood tweet or any of this stuff that I've been talking about. People fear change. We live in a world of the politics of nostalgia, where we look back on the 1950s, the baby boomers do, and thinking life was so simple. That world was never a good world either. But we have that politics of nostalgia because we fear change. And we're in a accelerating period of change right now. It's hard for people to understand. Like you said, you can't understand the life that your daughter's going to be living in 30 years' time. You have literally no comprehension of what that might be.
So there's Raoul Pal explaining the transformational power Bitcoin can not only have for individuals, but even the wealth of nations and mega corporations. Food for thought. Now, some recent on-chain Bitcoin data out from Sentiment, some data out about the elite of the elite Bitcoin holders. So what we can see from this data is that Bitcoin millionaires, which is wallet addresses holding between 100 to 10,000 Bitcoin, have been unloading a decent amount of Bitcoin over the last 5 days. There could be any number of reasons for this, perhaps just taking profits along the way, but it does look correlated to the reason we dipped from 64,000 to 60,000. The good news is that even with huge whales unloading some Bitcoin, the price has remained above $60,000, with other Bitcoin holders hoovering up any supply being put out on the market. Make of this data what you will, but I think it's important to cover both bullish and bearish Bitcoin data on the channel. Perhaps they are just moving money to altcoins. Anyway, guys, let me know what you think of that on-chain data in the comments. Hope that provided you with some value. I'll see you in the next video, and as always, have a great day.